Well, right now we have a generation that's just beginning to form households. Oftentimes they're two-income families. It's going to be their first home. Like many of us, before we make that decision, we're out there having a good time and not saving very much, and so we find circumstances where people need a little help getting into that first home. And help is available in many forms for first-time home buyers. I mean, there's a whole government agency that caters to first-time home buyers called a Federal Housing Authority, and they let you get into a new home with just 3.5% down payment. And even that might be a stretch for some folks, so there are down payment assistance programs that are available to help people. Here in Colorado, we have an organization called the Colorado Housing Finance Authority, and they will make a second mortgage to you if you're a first-time home buyer and you meet the qualifications in an amount of 4% of the loan amount, which is almost enough. Actually, it's a bit more than is needed to cover the down payment requirement. So you can get into a home with a minimum down payment. FHA loans are fairly easy to qualify for in terms of income, and case in point, $500,000 house, nothing down. If it goes up 5%, that's $25,000 increase in value that you would have had if you bought now, and you didn't work for that and you didn't pay taxes on it. So it's smart to take advantage of these programs if you're eligible. There are programs available from other agencies you may have heard of, Fannie Mae and Freddie Mac, and these agencies allow you to get into a home with as little as 3% down payment. If your income is within certain range of the average median income in an area, there are even additional special features associated with those programs, the Fannie Mae and Freddie Mac ones, whereas they'll make the loan available to you at a lower fee structure, which is the equivalent of a lower rate, really, and also they reduce the required mortgage insurance premium significantly, all to make it easier for you to handle that mortgage payment. Well, closing costs would just begin with probably the most expensive one nowadays is something called the underwriting fee. That's something that lenders charge on every loan. It's the same on every loan, in the range $850 to $1,000. Then you've got an appraisal. And appraisals right now are very expensive. We have title insurance. Title insurance in Colorado means that when you buy a property, the seller is able to give you an insurance policy that says there's no flies on the title, you know, that you're going to be able to own this home. No long-lost cousin of the seller is going to show up and claim an interest in it. You might have a credit report, make that $50. Sometimes you have to pay for a tax certificate. Anyhow, those closing costs, as a rule, are going to be less than $2,000 for most loans. Then you'll also be given the opportunity, if you work with me or other mortgage brokers, to make the decision about whether or not to pay points on your loan. Points will give you a lower interest rate, or whether to take a slightly higher interest rate where the lender basically pays you points and you can use those points to pay for your closing costs. So it's entirely possible to get a loan where the lender pays for your closing costs. In addition to the closing costs you would need, you also are going to have to create something called an escrow account, which is like a savings account that the lender holds in your benefit, into which every month you'll put 1/12 of whatever the annual taxes are and 1/12 of your homeowner's insurance premium. So that at the end of the year there's enough money in there to pay the taxes on the property, and the lender will then also pay your homeowner's insurance for you. Some loans with larger down payments don't require that those, we call them escrows, be held by the lender, but most do, particularly first-time home buyer loans. So when we're speaking of first-time home buyer programs, the brand names, if you will, for these from the agency are Home Ready and Home Possible. Both of them offer as little as a 3% down payment. If you qualify in terms of where your income is relative to the area median income. In other words, if your income is not in excess of, in some cases, 120% of the area median income, then there are additional features that make those two programs more attractive. So if your income is within 120% of the area median income as calculated by the Department of Housing and Urban Development for the community in which you live, or better still, within 100% of the area median income, there are additional inducements to use these two programs, one of which is the rate for private mortgage insurance is less than it would be otherwise. In addition to the nice features associated with these two programs, Home Ready and Home Possible, they're also available for down payment assistance, or what we call DPA programs. Down payment assistance comes in grants, outright grants that you don't have to repay. It also comes in what's called a silent second, which is just a loan made to you that gets recorded, but you have no payments on it and there's no interest rate, so it doesn't accrue interest. It's just you have to pay it off if you ever sell the home or if you refinance. So these down payment assistance programs get you over the hurdle of having to worry about any down payment at all. They cover the down payment for you in one way or another. So really, most of the barriers to buying that new home, if not eliminated, at least lessened by these special programs for people who are buying their first home. So we have a generation now that are forming households for the very first time. And there are programs that are available to help them with that, programs that offer minimal down payment requirement, programs that are more forgiving of some credit challenges, programs that even offer assistance with the down payment. You don't even need a down payment to get into that new home. And what better time to get into a new home when there are fewer buyers out there trying to buy that home in competition with you than right now.